Hi, welcome to Solution in YouTube channel. In today's video we will learn about depreciation. The term depreciation refers to an accounting method used to allocate the cost of a tangible or physical asset over its useful life or life expectancy. Depreciation represents how much of an asset's value has been used. Depreciating assets helps companies earn revenue from an asset while expensing a portion of its cost each year the asset is in use. Assets such as machinery and equipment are expensive. Instead of realizing an asset's entire cost in year one, companies can use depreciation to spread out the cost and generate revenue from it. This is done through depreciation, which allows a company to write off an asset's value over a period of time, notably its useful life. It may be used to account for declines over time in the carrying value, which represents the difference between the original cost and the accumulated depreciation of the years. Depreciation is taken regularly so a company can move the asset's cost from the balance sheet to the income statement. When a company buys an asset, it records the transaction as a debit to increase an asset account on the balance sheet and a credit to reduce cash or increase accounts payable, which is also on the balance sheet. Neither journal entry affects the income statement, where revenues and expenses are reported. At the end of an accounting period, an accountant books depreciation for all capitalized assets that are not fully depreciated. The journal entry consists of a debit to depreciation expense, which flows through to the income statement, credit to accumulated depreciation, which is reported on the balance sheet first. Straight line. Depreciating assets using the straight line method is the most basic way to record depreciation. It reports equal depreciation expense each year throughout the entire useful life until the entire asset is depreciated to its salvage value. Second, declining balance. The declining balance method is an accelerated depreciation method. This method depreciates the machine at its straight-line depreciation rate, times its remaining depreciable amount each year. Because an asset's carrying value is higher in earlier years, the same percentage causes a larger depreciation expense amount in earlier years, declining each year. Third, double declining balance. The double declining balance method is another accelerated depreciation method. After taking the reciprocal of the useful life of the asset and doubling it, this rate is applied to the depreciable base, carrying value, for the remainder of the asset's expected life. Finally, the units of production method. This method requires an estimate for the total units an asset will produce over its useful life. Depreciation expense is then calculated per year based on the number of units produced. This method also calculates depreciation expenses based on the depreciable amount. Let's assume that a company buys a machine at a cost of $5,000. The company decides on a salvage value of $1,000 and a useful life of 5 years. Based on these assumptions, the depreciable amount is $4,000. Using straight-line method, the depreciation expense will be as follows. The annual depreciation using the straight-line method is calculated by dividing the depreciable amount by the total number of years. In this case, it amounts to $800 per year. This results in a depreciation rate of 20%. Using declining balance method, the depreciation expense will be as follows. Using the straight line example above, the machine costs $5,000, has a salvage value of $1,000, a 5-year life, and is depreciated at 20% each year, so the expense is $800 in the first year, $640 in the second year, and so on. Using double declining balance method, the depreciation expense will be as follows. For example, an asset with a useful life of 5 years would have a reciprocal value of 1 over 5 years or 20%. Double the rate, or 40%, is applied to the asset's current book value for depreciation. Although the rate remains constant, the dollar value will decrease over time because the rate is multiplied by a smaller depreciable base for each period. Using units of production method, the depreciation expense will be as follows. Assuming the total number of units that a machine will produce during its useful life are 2,000. Now the depreciation will be calculated using the yearly units produced. Higher the number of units produced in a year, means the machine is used more, so more depreciation will be charged. I hope you have now learned some basic methods of calculating depreciation. If you liked the video, please hit the like button and don't forget to subscribe for more videos. See you with our next video. Take care.